Bloomberg's research that believes this. Michael Saylor, the biggest Bitcoin bull of them all, he came out this morning and he said that capital markets are funding the AI build-out at historic scale, about $400 billion over 6 months. The Bitcoin ETFs have seen about $4 billion of outflows since May 14th, and he says that that is pressuring Bitcoin. This is a capital rotation, not a Bitcoin impairment. Volatility creates opportunity. Now, the reason why I think that that is interesting is because you have to remember that Bitcoin has become out of favor. Why is that important? Well, most investors, they've got this idea that they are going to take their capital and they're going to chase momentum. So they see AI stocks and public markets going up and they start to chase it. And guess what? When they buy those stocks and they go up a little bit in the short term, people get very excited. They think that they're geniuses. There's lots of geniuses in a bull market. But the problem with that is that usually you start to pour more and more capital into the top of the market. So what do great investors do? Great investors take the opposite approach. They look at the things that are very popular and they say, I'm not interested in the bubbly, frothy, very euphoric type things. Instead, what I'm interested in, let me go find the assets that are out of favor, that are going to come back into favor. The things that nobody wants right now that are cheaper than they were previously. So if you take a look at Bitcoin, that's exactly where it is. It was $126,000. Nothing has changed about Bitcoin. It still is producing block after block of transactions. It is still a store of value. It is still being adopted by Wall Street and sovereign wealth funds and many, many other types of capital pools. It is still becoming the backbone for digital credit and many other aspects of these financial instruments. Yet, the price went from $126,000 down to $62,000. So if you liked it at $126,000, you should love it at $62,000. That's the whole point, is you go and you find assets that are out of favor, and then you have strong conviction that they're going to come back. Now, the other thing that people are talking about in the Bitcoin industry that I think is very noteworthy is that Bitcoin is knocking on the 200-week average. Now, the reason why that's interesting is because historically, when Bitcoin gets down to around these levels, it has been a screaming buy. It has had great forward returns. Does it mean the history is going to repeat? No, but likely it will rhyme. So my guess here is as Bitcoin has come down here, it is going to become more and more attractive. You're going to start to see people step in, they'll buy the asset, and we probably will not see all of the fear, all of the chaos, all of the uncertainty that we've seen in the past. When you read the headlines, relax, take a deep breath, calm down. Everything is fine. People are going to be freaking out. But you, if you can control your emotions, if you can simply make smart, long-term decisions, you have an advantage. And so if Bitcoin falls, great. It means that it is cheaper for you to continue to dollar cost average into it, and everything will be fine in your portfolio, in your life, and around the world. And people who tend to allocate their capital to Bitcoin at times like this, they understand, don't allocate your money looking in the rearview mirror as to what has already happened. Instead, you got to look forward. And my guess is that there is optimism and hope going forward for Bitcoin because everyone hates it. And when everyone hates Bitcoin, that usually means that Bitcoin is preparing itself to do what Bitcoin does best. The asymmetry will be back.